Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, London UK feed wheat, and European processing potatoes. I'll start with Paris milling wheat. The double top pattern which we've seen in Chicago and Kansas City, though not in Minneapolis wheat, is evident here but not nearly as imposing. And we've still not fulfilled the targets on the downside. I've nevertheless kept on the daily chart targets for the recent April to May double top. Initial target X was in the 201 3/4 area, whilst the full target X1 would be in the 195 even area. I also pointed out some while ago that a key point would be how the move under the 50% Fibonacci line at 206 1/4 happened, as there wasn't much underneath. Well, it wasn't much underneath until target X. As you can see back at the end of May, the drop below the 50% Fibonacci line of the August 2020 to January 2021 move at 206 1/4 was swift. Prices dropped to reach target X and then swiftly moved back up, which was satisfying in its own particular way. Anyway, reaching target X has been enough on the downside, as target X1 is a full target which in a lot of cases is not achieved. Now, I was going to retire them both today, but I decided to keep them on, as I think they may still have potential for target X1 and it might be useful. Anyway, the subsequent move back up from target X exceeded the recent 50% Fibonacci line at 212 3/4 and only really petered out against some of the lesser Fibonacci levels at 217 3/4 and 218 3/4, or if you like, the lows of late January to early February in 216 area. Take your pick on which answer you prefer. I think they're much of a muchness. We then started heading lower, and the market here is now asking the same questions we've seen asked elsewhere in the grains. Is this action since the May high a bearish halfway hesitation with a potential target X2 in the 188 even area, or is it a lopsided it looks better if you discount the May spike down, but is it a lopsided double bottom perhaps? The upper time, currently 206 1/2 of the breach but not broken bearish May to June shift pitch fall, along with the gently rising long moving average, currently at 210 3/4, have both kept a lid on the market. The upper time seemingly giving the bearish angle of attack. Well, this angle of attack, this upper time, was tested heavily this week, but there have not been any consecutive closes over it, and yesterday it seemingly resumed its bearish chores. Today target X has been achieved again. It now depends on whether the market has the bearish energy to tackle the next and probably the heaviest support below. That's the big old 50% Fibonacci line of the 2009 to 2012 move at 200 even. Beyond that, with the exception of this year's low at 192 even, we have little in the way of actually getting in the way of achieving targets X1 and X2 below that I can see at this time. Watch this space. London UK feed wheat. As I've mentioned over the last few weeks here, not quite the double top here we've seen in other wheat contracts over April and May. In the process, the market made an unusual horn top in early May, with one leg, the first leg, being a bearish gravestone doji. Anyway, the market has fallen since this horn top, holding and bouncing up from the now broken April 2020 today uptrend, currently at 195.55. Now, I don't think this uptrend was solely responsible for that. The long moving average just above eroded the bearish pressure and the uptrend just finished it off. However, the rise was ably stopped early on in June by the now declining medium moving average, currently at 230. Let me rephrase that, 20030. And we saw the second leg down start lower 2 weeks ago. Interestingly, the only times prices halted in their decline was when they stumbled upon the middle time, currently at 180.95, of the May to June bearish shift pitch fall. Now, I thought last week that the rising September 2019 to date uptrend, currently at 184.5, and perhaps more importantly, the big old 50% Fibonacci line of the August 2020 to May 2021 move at 188 even, would have played a more active role than this relatively new bearish shift pitchfork, but they did not. Actually, that isn't quite fair. The 50% Fibonacci line at 188 even did hold the market up last week, but the middle time was passing through that area at the time, so it could have been their joint endeavors rather than just the 50% Fibonacci line. The uptrend, well, that didn't do much at all. Anyway, what now? I asked that last week, and I answered, and I quote, "Well, I think there might be a little more available on the downside if the appetite for it is there. If the market can successfully convert the 50% Fibonacci line away from a support and into a resistance, then that might be on, and a potential for a possible bearish halfway hesitation over the May to day action could result in a move down to where target X sits." The target X is in the 180 even area. Now, please be under no illusions. I am not in love with this idea. I'm still quoting. I'm not in love with this idea. It is an option for the current action, and this pattern suits the idea for a few ticks lower. The alternative would be, perhaps we saw back in March and April, a consolidation on the 50% Fibonacci line, maybe a small bottoming pattern or action before a renewed move higher. To be honest, given where we are, I am not sure which is the preferred idea, the one to more likely happen. And that's the final end of the quote. Now, I'm being honest with you, I did have doubts about the move lower then, but not now, considering how close to target X we have come. Question now is, what's next after X? And we've just had an update of prices with a close, and we have reached target X. So I have to start thinking about what's going to be next after target X. European processing potatoes. One of the features of using continuation charts on futures is that occasionally you get huge gaps after changeover. This market is just an example of that. There have been others. The market was going sideways in the 13.8 area when suddenly, huge gap up. Not that I'm complaining of the direction. As you may recall, I highlighted the bullish bow tie formation at the beginning of May, which would indicate a possible move higher some 15 to 20 trading sessions after the, let's be honest, imperfect crossover of the moving averages, which were also in the wrong order on crossover for such a move. Anyway, the kick-in was due in between the 24th of May and the 1st of June, and dutifully we had such a move up, if only because of changeover. What is interesting about the latest move up is that despite some large gaps, the bullish Andrews pitchfork with the November 2020 to March 2021 action is still valid. All that has happened is that the market moved up from the middle time, currently at 15.5, to test the upper time, currently at 20.1, and then failed. So what now? Well, last week I pointed out that the subsequent move lower after changeover was showing signs of being tempered. There seemed to be an aversion up and away from the 50% absolute Fibonacci level at 17.5. I suggested that level may be the first significant support. Yesterday the market dropped down to test it properly and reverted back up after touching it. However, today we've had a small move lower that has breached the 50% absolute Fibonacci line and closed below it. This is significant as there's little support below the market until prices reach the middle time, currently at 15.5 of the bullish Andrews pitchfork. I should point out that this middle time has not been tested. Indeed, the whole bullish Andrews pitchfork hasn't been really tested, bar the topside upper time, and then only briefly. I have a suspicion that the topside changeover gap may see some considerable filling in, unless another factor reveals itself. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.